Hello and welcome to this another edition of the Crypto Club and Digital Assets weekly catch up on Zoom. It is Sunday, the 4th of April 2024, and as is always the case, we never quite know what we're going to be talking about. If you're a novice in the crypto space and you're hearing all these buzzwords and phrases and terms that you don't understand, stick around and see what you can learn today. If you're someone who's involved in blockchain or crypto or DeFi or NFTs, then come and join us, talk about your project. We hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time, and everyone's welcome to come along. If you'd like to join us for a future session, just check out the link below. So with that, let's see who's going to come and join us today. Hey, Stefan.
Hey, how are you? I forgot to come last time, so I had some issues too.
Okay,
And yeah, how
not a
are you?
problem. Not a problem. Well, welcome back anyway.
Thank you.
Yeah.
The market changed a lot.
Well, it's constantly going all over the place. So I always find it
Yeah.
fascinating how people try and predict these things. Um,
Do you, do you know about this guy called Crypto?
no, who's that?
So, I mean, this guy is also like, this guy supposedly is very rich. I don't know how rich he is, but he's like really rich. And this guy, he's talking about the rainbow pattern, and then he says that somewhere around like 100,000 is very likely to be the top. And he points on a couple of intelligent things because if you say to think like we all expect to make money, we all talk about how much money we are going to make from cryptocurrencies, and every single time I had this feeling that last time it was like this when Bitcoin went to 69, everyone was like, "Oh, don't worry, what 100K soon, and we're going to make so much money from cryptocurrency." And then
Yeah.
it was the end. And I'm wondering if this guy might be right this time also. What
I
do you
think
think?
I think the reality is nobody actually knows, and
True.
it's interesting because my interest in crypto is not really about making money out of the prices going up.
Okay.
It's about the technology that sits underneath it. So the distributed layer, the blockchain, the smart contracts, the programmability. But this is what I find fascinating. Whereas it's a shame in some ways that a lot of people are into crypto simply thinking, oh, it's going to go up in price. So you could be
Oh,
buying and selling shares, you could be gambling, you could be doing whatever.
yeah,
It's no kind of difference. So I'm more interested in crypto as being a means of making electronic payments, as opposed
true.
to it being a store of value. So
Okay.
it's interesting how a lot of people who are into crypto are doing it simply because they think it's a way of making money. The reality is, for a lot of people, it's a way of losing money. So it's no different
Yeah.
to any other scheme or whatever like that. So yeah, I find it interesting, and this is where it's always amusing looking at the markets where Bitcoin in particular. Everyone always gets excited when it starts going up, and they say, "Oh yeah, this is going to hit 70K, it's going to hit 100K, and so on." The reality is, it's a manipulated market like anything else.
Yeah.
Um, and we don't truly know what it's going to be. The one I find funny is when people try and give justifications to why the market is going a particular way. And you'll hear things like, oh, it's the crypto winter, or it's people are cashing in and that. No one really knows.
Yeah.
Unless you're a whale. So somebody who's got, what, 1,000 Bitcoin or something.
Mm-hmm.
No one really knows a lot of these
Yeah.
things. So I don't know what's your thinking. What is it that you think influences the market?
Well, I think it's a combination. First of all, it's like everything and not everything, I would say. I think it depends on times because, for example, I remember when I was in like 2017 and 2018. I remember for a time that there were some of these projects that they were had like a liquidity of 500,000, 100,000 dollars per day. And if you say to think like with the liquidity that low, you could actually make the price of a coin on a specific time. Like you could be one of the rich people and then make the price. So I don't deny the fact that it's very likely that there are people who make the price to investments because for us, 1 million is a lot, but for the Saudi Arabia, for the how do you call royal family, for them
Hmm.
1 million euros, it's nothing. It's like probably toilet paper.
Yep.
And for us, it matters. So I'm really agreeing that there are possibilities that some other people they are making the market. This is the thing that frustrates me about the government, I would say, because I don't feel like the democratic government it actually does its job. Because in theory, these kinds of things should be illegal. Nobody should be allowed to make the market. But I don't see that much, or it's also difficult to, how do you call, to police these kinds of behaviors, in
Hmm.
my opinion. So I think that in a way, when we are going to be like on chain, it's going to be a bit different because you will be able to see much more information than compared to what we see now. So
Yeah.
that's a hope. Yeah, sorry.
I agree, and that's why if you look at any market, whether it's commodities, whether it's shares, whatever, has the potential to be manipulated, and this is why
Yeah.
regulators will normally have supervision in place, they'll have governance in place, and everything. But even with that, you never know truly what's going on. At least with a blockchain-based environment, then you do have the visibility. But even with that, if you think about how crypto works now, okay, so Bitcoin, for example, all the transactions are on a public ledger. However, the exchanges are doing their
Mhm.
stuff off chain and everything. So it'd be interesting to get
Yeah.
other people's views. I see we've been joined by a couple more people there, Stella and Doncha. Hey, good afternoon or good evening or good morning to you both.
I got my name wrong. It's my his name. Good name. I had no.
Your audio is not great either, Stella. So we'll stick with that for now until you can change change your name as well. And Doncha, is that did I pronounce that right?
Yes, that's correct. Donegal,
Mm. Hey Donica, where are you calling in from today?
Ireland, Cork.
Okay, excellent.
Yeah.
We seem to have a growing interest. There's a couple of people who sometimes dial in from just outside of Dublin.
Okay.
I think it's just outside of Dublin, one a bit further south as well. So great to see the Irish contingent. It's
Yeah.
really good. Yeah. What brings you along today then, Donica?
Just relatively new to this crypto. I just want to kind of see what other people's views are and stuff like that.
Hmm. Yeah.
Um,
Do you have any experience, or are you just
uh,
learning really?
I'm just learning now. I did get in about 3 years ago. It was exactly 3 years ago. I
Yeah.
kind of got in, kind of went to start to kind of going up as a bull.
Mhm.
And of course, I didn't know about the 4 year circle, so I didn't sell. And
So,
so
so
now I'm kind of hopefully I can
the,
time it this time.
the other thing is always be cautious when people think that markets have a predictable cycle. They never do. And
Yeah.
Sure,
so
sure.
if things were completely predictable, then we'd all be doing really, really well and the markets would level out. So I wouldn't be so sure about that. Um, I don't know. Edward now. Edward, you've gone through a bit of a change in the last few minutes.
Yes, it's changed. Can you hear me better now?
Yeah, it's a bit blurry. I don't know if you're a little bit far away from the microphone or something, but
Um,
just about hear you.
yeah, well, anyway, sorry about that. Yeah. So, I don't know anything about this matter. I thought I just joined to see what you guys have about. Basically, I work for a company called Secretarium, and we are all about confidential computing. Where it's in um, uh, uh, trading systems or information exchange or for instance, with volatile HSM solutions, secret sharing, as well as things like lethal potential. So the problem of front-loading attacks on Ethereum blockchain side of things. We can also implement our own blockchain implementation, which does proof of protocol rather than proof of work and proof of stake, which is considerably faster. Um,
Edward, I think you're saying lots of really interesting things there, but I'm only picking up about 1 in 4 words. I can hear things like secret sharing, so I guess that ties in with things like Shamir secret sharing and cryptography and that. But yeah, I'm struggling to get the audio from you at the moment. I don't know if other people can hear you okay.
Let me just see if I can get my. Right, can you hear me better now?
Marginal, a little bit maybe. Well,
Yeah,
maybe while you try that, so see if there's anything you can do to pull up an alternate. And
yeah.
we've been joined by Fernando as well. Hey, JT.
Hey, how are you?
Yeah, there we go. Listen to that, crystal clear. We can hear him really nicely. So we've just been talking about the markets in general at the moment. My theory is that the crypto market just is not predictable as such. And so you get this thing where people are saying about things going up in price, down in price. I'm actually not interested in prices. I'm interested in the technology that sits underneath it, which I guess in some way, JT, is your kind of interest as well, because I think you look beyond the prices and you look at the potential of.
I'm using my headset. You turn off Bluetooth.
Yes, of course. Uh, you know, for years and years, right from beginning, I've been very focused on technology and so on. But it's we had this conversation, I think, before, and when I speak at conferences, I've been focusing even more lately to try to get people to do different things, not the same things, not another DeFi, not another NFT, not another meme,
Yep.
whatever, it's full of it, not another layer two, not another blockchain. It's full of these, and people keep repeating the same things. When I actually did a motivational talk not long ago about this, I think it was in Berlin, if I'm not mistaken, or Warsaw, one of them. It was really about trying to focus people's mindset, because there was a lot of developers there actually, And I was telling them, just look at Web 2, there's 1 million, 2 million, 3 million, services, apps out there. They are still all in Web 2. They need to be brought to Web 3. Just be creative about how you're going to do it so you can get that strategic advantage of existing services where you can do something a bit more innovative, or even invent something, around that, So, and then just go and do it, because I think those are the ones who are going to be successful. A lot of what is being built is all about the money, If you look well, probably gaming is the one that is kind of not so much about the money. It's more about entertainment, and people love playing games, all of that stuff, Of course, associated with tokenomics and tokens and NFTs, which is great, All of that is great. But the rest is mainly infrastructure, and they kind of let down so many people, I mean, there's projects that got like billions of investment, and they're still not running well, Look,
well, I think you're right.
Sorry, let me just finish this.
Yeah, go.
Example is a good example. I mean, it's been the whole week, the network has been congested, It's really hard to get a transaction through, So all of these people building all of these layer ones and layer twos and ZK solutions, there's none of them out there that is really prepared. We've been talking, do you remember we were talking already 3-4 years ago about generation 4 and 5 of blockchains? None of that is working, properly.
Yeah. I think that's the other thing as well. I still see a lot of stuff where the techies are trying to deploy technical solutions without actually solving a credible problem, because they're thinking of it as solving technical problems when they're not actually doing anything that is bringing any value to what people want. So that the whole thing of like, well, is this making this easier to access? Is it making it easier to use? Is it making it faster, cheaper, simpler, whatever? None of them seem to be really addressing that. It is all about, ever since the ICO
money
craze, really, 2017, 2018. Yeah. I'm going to launch this token, and it's going to moon, and it's going to go up 100x or whatever, and that's the sole reason for it. And I think that's a real shame that a lot of the crypto movement kind of lost its original direction, I think.
It was an attraction for Lambos, the moon and Lambos and all. People get really into all of that. Yesterday, I saw fascinating, actually. I'm trying to figure out how the guy is doing that. In one of the groups where I am, the guy put like $38 of Solana, okay, and is using a new service that has sniping capabilities, and it's sort of you just choose your type of strategy, and you has an MEV bot behind, and you just let it go. In 2 hours, he went from $38 to $7,200, and he can
Wow.
get out as soon as he wants. So he was not taking anything. So he configured it in a way, and it's literally just the user interface. You just need to have a trader mentality to see the strategy and maybe which tokens probably going to do well, or you need to have something kind of insights. So these are for experienced traders that can spot these. So I was
He-
fascinated because they are making it so easier for people to actually make money.
But the problem with that, because I've seen some trading bots where you develop strategies, you put in data feeds for it to pick up things, whether it's Twitter feeds or prices or whatever. And I found that most of the trading bots are simply very good and very efficient at losing your money faster. Because the problem is that you need to really know what the triggers are, what the signals are, what the open positions are, what the closed positions are, and most people don't. So
Yeah, that's
what
what
they
I'm saying. The good traders, experienced traders, will make
Yep.
really
Yep.
lots of money. For a guy that is not a experienced on that, and I'm not a trader, okay? I understand a lot of the concepts and principles, but I'm trying to figure out how the guy is doing that. It's amazing. He
So
was posting constantly
I
screenshots,
can
and it
explain you
was just going
something.
up and up and up in
go on,
2 hours.
I think Stefan's got a view on
Yeah,
that.
sorry, yeah.
Go for it.
So
Go for it.
depending, first of all, you have to know exactly what projects you invest in. For example, if you have a project that is very hyped, okay, then let's say they do on a crowdfunding, they gather the money, and then what they do is these projects, they also tell you when they will list their token, when they will be live, and what will be the address, the contract. And when you find out the contract, you can actually go on like Banana Gun on Ethereum, but I don't use these kinds of stuff because they are actually centralized, first of all. So basically you can end up the guy who has the bot, he can just leave with the money and you won't get nothing. And second of all, I'm a bit panicked because I don't know exactly how to configure the bot. But the way it works is that that bot, his job is to get in the first block when the contract is launched and also when the liquidity is pulled. And in this way, if you are the first one in the same, preferably in the same block, you can actually end up having a lot of money because when a project that is hyped goes in, the project will still go up. Even after the launch, it will go up like 1x, 2x, 3x, and that's how these people make money. That's one strategy. There are possibly like other ones, but this is the most basic strategy. But I haven't done it because I thought it's only possible on Ethereum, and how do you call it? The transaction fee is high, and I never bothered with it.
No, you can do a lot more chains now, yeah. And this is not actually a bot. Was not this guy's bot. It's actually using a service that anybody can use out there.
Yeah.
It's just go to a web page, connect your wallet. Yeah, it shows you the tokens and projects, and somehow I need to figure out. I need to actually have a proper chat with the guy to try to figure out how to do this because. Look, I know one guy, the founder of Dexe, DEXE.network, yeah? And this guy was one of the very first that came with copy trades. So if you know a wallet of a guy that is a good trader, you know, he basically you can fund your wallet with I don't know, $100, 500, whatever it is, yeah? And you just put the wallet address of the trader, and the bot has been doing this for 3 years, yeah, and he himself makes a lot of money as well. But the project has allowed so many people to
But,
actually
but
make good money. Now, of course, for some people to win, some have to lose. So it's always a fight between these services or which ones have the best strategies for their users because they take a cut of the transaction, all of these services. So very rarely I see guys that have their own bots doing this, you know? I mean, we're talking just about large exchanges, large hedge funds, you know, oh, those guys, yes, they run the bots with clever strategies and so on. But there's a lot of small traders, like weekend traders, that are making really lots of money, you know, and I'm trying to figure out.
I guess that's the thing that, as you say, most people don't actually know what signals to use.
Yeah,
Most
exactly.
people don't know what levels to set, what exposures to do. And so the easy way is you just copy trade. And
Yeah.
this is where the likes of eToro provides copy trading facilities, and a lot of people are into that. But I find it interesting that do you almost like create a feedback loop there that if somebody knows that a copy trader, sorry, that a trader is who a load of people copy, then you're going to start recognizing that as soon as that trader does something, you know a load of other people are going to do something, and that is then going to start affecting the price in its own right. So do you end up in this situation as a trader, if you know a load of people are following you, that you start putting trades on in the full anticipation that you know that a load of other people are going to do it, and you're almost like driving the market yourself.
Yeah, I totally agree with that.
Mm. It's kind of interesting. Hey, just been joined by Ken as well. Hey, Ken. We're
Hi, how are you?
just talking about trading and strategies and how people are developing bots to do automated trading strategies. And my view from what I've seen of things like, there's products like, I think Crypto Hopper was one of them, where you end up spending so much time configuring these things that all it eventually does is it allows you to automatically lose money more efficiently than you would have otherwise, is how I put it. So I don't know, but that's not really your area of interest, is it, Ken? Because you're more into the Ethereum and
Yeah, I mean,
redesigning that.
yeah, I don't, I mean, I see the traders out there, so, but I'm not really a trader. I have kind of like when you talk about the bots, just to kind of see how they work. So I have written a couple of bots, but this is like, we're talking 2021 when you could do the, basically you could effectively just borrow money without having the money. So the complete trade in one transaction. So I take, try that a little bit, but didn't really get into it. I just basically did it. This is when Nave was called, can't remember what they're called before that. They're called Lend or something like that.
Yeah, Etherland, I think.
Yeah, that's it.
Etherland, yeah.
Yeah.
Was this the whole thing where you could temporarily take a loan, buy something, sell something,
Yeah,
repay the loan, as long as it was all within one transaction block?
Yeah, within the same smart contract.
Yeah.
So if that smart contract completes, in other words, by the time it completes, it has to pay back the loan. The transaction has to be positive for it to complete. In other words, you have to have made money. If you don't make money, then and you can't pay back the loan, the transaction basically is
Cancels.
out. The money is not taken. I mean, it did work for a while, but then obviously a lot of the exchanges worked out on how to defend against it.
Yeah. I think it was one of those things. I started looking at flash loans and I thought this is a great way for a few people to make an awful lot of money. And it's a great way for a lot of people to lose an awful lot of money very quickly if they're not careful, because it just seemed technologically complex in how it was all working, of trying to complete everything within the one transaction. And it felt almost like an exploit in some ways, the way some people are using it.
Yeah, well, people called it exploit, but really it's just the same thing as arbitrage. The only difference in an arbitrage is if I see, I don't know, Bitcoin or Ethereum is trading in Germany at low price as it is in South Africa, then I take my own money, buy it in South Africa, sorry, in Germany because it's lower, and I sell it in South Africa and I make the difference. In this case, it was, well, if you don't have the money to make those trades, you could actually borrow it and complete in one transactions. But then obviously a lot of, there's defense mechanisms against that have been implemented, so that doesn't work at the moment. So it's back to the old standard where you need to have the cash up front.
Which is one of those things that one of the original things I really liked about crypto was it was moving away from the concept of a debt-based economy. You couldn't sell something that you didn't own. And I really like that as a fundamental principle. And this is where, when they started introducing things like flash loans and collateralized loans and this kind of thing, it's like, well, actually, you're going against some of the basic principles that I thought crypto was going to go against. And you're going to end up down this debt route again. I don't know. I mean, Edward, have you got your audio any better?
Can you hear me now?
It's still as though you're at the bottom of the ocean.
Well, I don't know what to do about this, but can you still hear my words?
I can hear you a little bit, so it's probably worth persevering now.
Thank you. I apologize. I don't know what else to do.
That's right.
Maybe just try this. Okay, well, no, my background, I work for Chemical Secretariat, and some of you know a thing called Intel SGX, which is a technology by which you can run software in an environment which is not accessible by debuggers and viruses and the like. So you can run code, whatever it is, including smart contracts, in an environment which are confidential.
Yeah, I was picking up some of that. So you're mentioning Intel SGX. So if I remember correctly, that's a secured area on an Intel chip, which is like a reserved area for processing, which is dedicated, which makes it super secure. Is that right?
That's correct. So fundamentally, it's a hardware protection against even malicious system administrators on the computer that you happen to run on your software. You can combine that with something called remote attestation. So the web browser can connect to one of these enclaves and you get a remote guarantee they're actually talking to software, is running inside an enclave, and is talking directly to you, and is not running in an emulator. And so what we've done is we've implemented a cluster solution which does raft protocols. So you go multiple nodes all together with a leader and followers. And then on that, you can actually run a variety of different things, including, for instance, one of the clients is a metals exchange. One of the things that mining is very bridging, that people are like, seeing prices and getting coin and mining, and the things are better deals than the brokers, organizing it. Sharing of secrets between banks, for instance. So, for instance, legal entity information is expensive. So if you want to reconcile that you are actually trading the same thing, you upload your legal entity information into one central repository that is confidential, and then give you a Boolean signal saying, yes, this data matches, and although it doesn't. So recently we now branched back to digital assets. For a time I wrote it about 3 years ago, but then everything went pear-shaped. We are now re-implementing ERC20, basic kind of connectivity, import and export of keys, allowing us to do a variety of things. So one of the things we're looking at is being able to do implementing an EV pool. So we can upload your trades into an EV pool, building up transaction and proof of stake without people seeing a transaction with who's at the top of a list, and therefore you can, for example, front load particular trades, for instance. So that's one thing we're looking.
So it's kind of zero knowledge. Is that kind of zero knowledge proof then? Because you're able to do something without being seen that you've done it. Okay.
Yes, but it's pretty sure and complete. Because we have a consensus protocol for time. So we can, we've solved the Oracle problem that conventional Ethereum contracts have. We can.
So is that
stuff.
Yeah. So that's using POET, is it? Is it proof of elapsed time as opposed to proof of stake? Is that right? Did I get that correctly?
Basically, you have enough servers around the world and they're all agreeing to what that time is. That was the time. So it's a consensus-based mechanism on what time is. And of course, you have a certain resolution of time, but we will have a large collection of clusters of machines around the world, and they all have a view on a certain time. And when there's one outlier saying it's no, it's Tuesday instead of Thursday, then you can ultimately detect they are talking nonsense, and you ignore that particular, and blacklist that individual. So that's quite interesting.
So, Edward, for anyone who's interested, is this public, or are you in stealth at the moment?
We have a product called Clay, which is becoming open, becoming open available for people to play with. It's still in beta. So if you KLAVE.com.
I was going to suggest with the audio being a bit broken, if you want to type that into the chat, and then I'll pull that into the recording of the session later on, so that people can refer to that. It's something I'm sure people will find of interest, but it is very difficult with the audio at the moment. So Clave, KLAVE.com. We can.
So Clave is the platform. That's I think Secretarial is the company. The cluster is technologies written in C++, but Clave is basically a WASM-based platform by which you should be able to write in any language, whether it's Rust or JavaScript or something. So that's still in beta at the moment. It works with a thing called assembly script, which is like a dumbed-down version of JavaScript, but we are hopefully in the next couple of months we'll go for Monty WASM running inside an enclave.
Okay. It'd be interesting when we've got a better audio connection to talk further about that, because that looks really interesting. Because I'm always interested in particular about things like I noticed you've got the whole thing about managing cryptographic keys,
yes,
and generating and storing them, that kind of thing. So it's really interesting. Okay, that's something to check out.
Yeah, storing a queue. So at the moment we've got two approaches. One is we're doing a sharding technology, which we're using.
I can't hear if I have these guys here. I've put it on.
Was
that JT? You can't hear,
No,
or
you can't hear anything. You have to...
Okay, well, shall I another time? I don't know what to do anyways.
Edward, it might be worthwhile just log off and log back in again. See if that works. Give that a go, and we'll carry on. We'll still be here in a few minutes.
Okay, take it.
Why are they doing that with a guy that is much stronger?
Yeah, we'll see if that works. Sorry, Donatia, just coming back to you. Is it you saying you first got interested about 3 years ago? I think we'll just pop JT onto mute. I think he's got some background going on there.
Yeah, about 3 years ago.
Okay, yeah. So what's the area that you find of interest in this space? So are you just interested in like the prices and the markets and that kind of thing, would you say?
Pretty much, yeah. I kind of got involved in eToro as well, and I do have some copy. I am copying some investors that are doing pretty well. But it's not just crypto; it's stocks as well.
Yeah, well, that was where eToro kind of cut its teeth, wasn't it? Because they are a trading platform, which is stocks and shares, and then they built up the copy trading on that, and then they extended into crypto. And it is one of those interesting things that, if I remember correctly, with how eToro works, whilst it allows you to get exposure to crypto trading, you don't actually own the crypto itself. You just own the rights to the crypto, because you can't actually transfer it onto your own private wallet, can you? If I remember correctly.
No, you can't take it up.
Okay, I think you can now, though. You can download a wallet and you can transfer it. Yeah, but you just can't transfer it back. Once you take it out, you cannot put it back.
Okay. So they've got the ability for you to take it onto the chain.
Check it out.
Okay, but
Yes.
you can't then, yeah. Which is I've seen that with a couple of projects, and it's all because you don't technically at the time where you're trading or you're copy trading or whatever, you don't actually own the crypto itself. You own the value of the crypto, and then what they do is when you exit, then they'll convert that into what I'd call real crypto kind of thing. Which sounds a bit strange, but at least it means that you get some exposure to the market without necessarily owning the crypto itself. But that's
Okay.
makes it easier for some people at least, which is good.
Yeah.
You know
Yeah,
what,
definitely.
Kerry, I'm curious. Why do you think the UK government they don't want to add cryptos and cryptocurrency on their ISA lifetime or ISA stocks and shares? Like I always wondered about this.
Yeah, so yeah, you have to kind of start segregating that. You've got the UK government, you've
Hmm.
got UK Parliament, you've got members of Parliament, and you've got the regulator. And the regulator is the FCA, which in theory puts in place the regulations to support the legislation that the government create and that Parliament support. So you've actually got it's actually fascinating when you look at how constitutionally we're running that. And so what we've got at the moment is that if you speak to people in government, so ministers of state and this kind of thing, they will say that they're crypto friendly and that they're supportive of crypto and they can see the innovation, blah 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 blah. But they've not enacted they've not enacted the legislation that then gets the regulators to support it. So it's kind of bizarre that you've got politicians who are saying, yeah, we love crypto, but they've not pushed that love of crypto into legislation, so regulation. And so the FCA a few years ago that they did a review around crypto assets, around crypto derivatives and that. And this is where they declared at the time that they felt that crypto derivatives were too high a risk for the public to be able to invest in. So it's kind of like the we know better than you, you don't understand what the risks are. And
Oh, I see.
it was fascinating. So the FCA actually did a public consultation. And I can't remember how many people responded. It was many thousands, of which I think it was 96 or
I responded to
97%.
it.
Yeah, and then 96 or 97% of the respondents said, we understand the risks. We understand this is highly speculative, totally risky. I could lose all my money. That's fine. Let me do it. And the FCA said, no, we know better than you and we're not going to let you. So this is the whole thing where there was what was known as a SIP. So it's a self-investment pension plan, I think it was, which Hargreaves Lansdown did, which included exposure to crypto. And this was, and this is something, this is where it gets fascinating. So crypto at the moment in the UK is not a financially regulated product.
Well, basically what you mean, it's not been through Parliament, so there's no laws, but it's just like the UK, it's regulation by enforcement. So the FCA decide, and that's it. So they've decided, for example, that you should not have cryptos in your ISAs, and that's it. There's no law against it, but they're the regulators.
So this is where it gets really interesting. Okay, so crypto in the UK is not a financial regulated product. However, if you put a wrapper over it, which is what a SIP is or an ISA or anything else, that then creates what is known as a crypto derivative product. And all derivatives are subject to FCA regulation. So this is the profound thing that you've got Bitcoin, for example. Bitcoin is not a financially regulated product, but if you put a wrapper around it, which means you've got a derivative of crypto, that is regulated. And so this is why the FCA basically banned crypto derivatives for consumers. So this is non-sophisticated investors, retail, so individuals basically. It gets even more complicated because whilst crypto is not a financial regulated product, if you're a company that is dealing in crypto in some way, then you can't be licensed or regulated. However, you do have to go onto the crypto asset register. So you've got a regulator who's got a register of all the companies who are registered for providing crypto services. And so you have to be on that register, even though it's not regulated. So it seems so crazy, so confusing. So, Edward, you've rejoined. Is the audio any better? Oh, you're silent now, which is something.
Oh, there we are. Sorry, it's better now. Sorry.
That sounds much better. We can actually hear you now. It doesn't sound like you're at the bottom of the ocean anymore. That's great.
I apologize about that. I turned up on this thing without being properly prepared, so I just thought my laptop would be working fine. It wasn't. Anyway, never mind.
No
So
problem.
I'm very mess. I've been painting all afternoon.
No problem. Well, welcome back anyway. Sorry, Ken, you're asking about the regulation.
No, I was just saying they some sort of regulations come in because all the exchanges I go to, the message keeps popping, and you basically have to go and read a piece of message that say you understand what cryptos are, blah blah blah.
Yep.
And every single exchange, UK registered exchange, says that at the moment. So something changed.
And I think that is because there's a couple of pieces of legislation that have come in. One is around crypto marketing. So there's now an obligation on anyone who's marketing crypto products that they have to ensure that the way they're marketing things is done correctly. But that's one of the things that got introduced. And there is other legislation as well. But the legislation is not directly against crypto. So what the British government's done is they've managed to establish a situation where crypto is not yet a regulated financial instrument, but it is subject to a whole load of regulation. So what the FCA did, for example, is they said, well, while crypto is not a regulated product, anti-money laundering does fall within our domain. And so this is why the FCA is responsible for the supervision of anti-money laundering regulations, which is why, again, a lot of crypto exchanges now have to comply with certain things, like the crypto asset registration, in order to ensure that the FCA can prove that they're doing their anti-money laundering thing. The end result is it's all far too confusing and it's not crypto friendly. And this is where I think it comes back to what someone was asking before about the government is, in theory, supportive of crypto, but it's not put in place regulation that's supportive. You compare that to the likes of Dubai, Abu Dhabi, where they've got crypto-friendly regulation, where it actually explicitly calls out crypto. It recognizes, is it VASPs? So virtual asset service providers. So these companies who provide crypto services, it regulates them, it authorizes them. So it's much, much clearer. So in the UK, it's a little bit like, it used to be traditionally in the UK, you could do what you wanted as long as it wasn't illegal. Whereas in America, it was always, you can't do anything unless it's been made illegal. So it's one of these fascinating differences that in the US, you can't do something unless there's a law allowing you to do it. Whereas in the UK, it was always, you can do it unless there's a law preventing you from doing it. Well, right now, we're kind of in that happy zone in between where, there's a lot of restriction. And this is why a lot of crypto companies have left the UK. And they've moved to jurisdictions that are more crypto savvy or crypto friendly. And I think the FCA is going to gradually change, but it's going to take time. That's my view on it anyway.
I wonder if this is not like a scheme for the public to earn more money without having to pay tax. That's what I think. I mean, if you stay to think, historically, when the market is going to be regulated, thinking about like long tail of economics, there will always be new projects that will pop up. I wonder if they are going to be listed like normal stocks, how you have them nowadays, or is just going to be like on a case-to-case basis. That's what my curiosity is. But I also think that they do this, all this charade, just to like make people earn less money and to keep them down. That's what
Yeah.
I think.
Well, certainly there's a lot of people I know who aren't happy about the fact that they accept that crypto is a risky product. They accept that there's minimal regulation, there's zero protection. They accept these risks and they say, yeah, but I'd still like to do it anyway. Just like going into a casino. I know what the risks are. If I put all my money on black and it comes at white or red, I've lost my money. But the FCA adopts an interesting posture. That it's almost like we know better, and therefore we don't want to allow you to be exposed to that risk. So the thing you mentioned about taxation is interesting, because for a while it was very, very hazy about what the taxation situation was. In the UK, it seems to be fairly clear now. It's that every trading event, if it's a buy, a sell, a transfer to another crypto product or whatever, it is classed as a taxable event. Well, whether you actually pay tax or not is another matter, but you have to record it. And so tax authorities are always great at working out ways of charging you tax, no matter what you're doing, because
Well,
it's a revenue source for them.
in the UK, I think at the moment it's if let's say you've got a full-time job, I don't know, let's say you're a teacher and you're trading crypto in the side, that any gains or basically any gains you make will be treated as capital gains.
Mm-hmm.
And then obviously if you have any losses, you can write that off against any tax you've paid. And that's for the vast majority.
Actually, I'm sorry to interrupt, but it doesn't work like this. If you have capital gains, you can only write it off on capital gains. You cannot write it off on income tax. And I tell you this because I had it on my own experience.
Yeah, that's great. That's what I'm saying. If you have, for example, you sold a car, you've got capital gains on that or something like that, then you can write that off. But there's a small minority who can actually claim it as a if you're trading full time and you can tell the HMRC that that's your job, that's what you're self-employed and all you do is trade in and out, then it can be treated as basically as income. So you pay profit on taxes and so forth.
In theory, I'm sorry to interrupt. In theory, you can actually do both. You can have a job like a teacher or something. You can also trade and you can also invest. But the problem is that the HMRC is going to get angry because you basically pay less tax if you do that. Because every time when you lost something, you can treat it as like trading advice, trading work. And every time when you make money, you put it as capital gains tax.
No,
I'll disagree with that. MRC came clearly and said if you've got a job, then all your crypto activity, whether you're trading 50 hours on the weekend, that each transaction is going to be a capital gains or capital loss issue, because they're going to treat your job as your employment, and everything else is capital gains. It's only if your 100% employment is trading and you can show them that this is what I do for a living, then it will be done as a business, and therefore you could write off maybe, I don't know, you've got to drive someone to pick up a computer or something like that. And they've been very clear about that. And if you go on their website at the moment, they do have some advice which they say if you've underpaid, you can voluntarily declare, and you can even they actually ask for the software that you use to work out your crypto taxes, and then you pay whatever. But there's an amnesty at the moment. I don't know when that amnesty ends, but they've got a lengthy explanation on their website, HMRC. I know that because I had to deal with that.
Every time when you have to give them money, they are always happy. When you have to take them back, they won't be happy.
Yeah, I mean, it comes with a really scary warning that anybody who sees it actually would, it's like, if we have then to investigate you, you could be owing tax penalties, interests. It becomes very,
unless this is where it's the heads they win, tails you lose type thing. So the ultimate guidance, as I always say, this is not financial, regulatory, legal, or taxation advice. I would always say check out whatever your tax authority says, And the ultimate thing is, it comes down to whether you are a person who's primarily generating your income from crypto trading, or whether you're a speculative one who's making money, whatever. Either way, the actual ultimate thing is that you have to record every transaction, and that's where it gets interesting, because it's the obligation to record all transactions and supply them, which is where the onus lies. And some people don't
Biggest
realize that a lot of crypto exchanges now supply trading details to the authorities as well.
The biggest thing though, it's really not recording it because you can you can get your wallets. The biggest thing is getting, I think the accountants call it the base figure, whatever whatever your initial money that you use to buy. I mean, it can become very interesting if you, I don't know, you put in 1,000, you transfer it, you buy a meme coin, and you go, yes. Then it's like, where's your base? I mean, how much was your original amount? And then you've got to go from each one and to each one.
And that's where you have to do what's known as a mark-to-market conversion, if I remember correctly. So for every single transfer that you make, you have to do, well, what is the GBP equivalent of that trade?
Yeah, a lot of what it is a lot of the software, I mean, out there, they do it once you're inside, but then you've got to work out. I mean, it was quite, I mean, in my situation, it's very complicated. I actually had to hire specialists to deal with it. And the biggest issue, it's, oh, when you did this trade, we're not actually sure where the original money came from. So you've got to work out, did I actually transfer fiat and then buy the fiat and then send it out and so forth. So it's literally, you've got to work backwards and trying to jog your memory. And so it was a situation of, here's my wallets and here are my bank statements. Let's just see where, it gets very complicated. So I think HMRC is going to need to get something simpler for people, because or the easiest way, as they told me, is if you just use one exchange, then at that time, when your money goes in that exchange, you know when it goes in, and then move it into stable coins, because that's just having it in cash equivalent. And that would be the easiest thing, but people don't do that. And effectively, most, because you have to go back a year and try, well, actually, it's 2 years really, it's a year and a half you go back.
The other one as well, I'm not endorsing this as a particular product, but it's an example of what you can do, is I know a lot of people who use Coinly, and Coinly is a software that you can link multiple wallets to, and that will actually generate effectively a tax statement for you.
So yeah, I use Coinly. I'd say they had the same problems. It's not 100%. I mean, if you're doing, I'd say if you've got transactions over, I don't know, over 2,000-3,000, it's a good base to start. But if you've got, I think if you've got over 10,000, then obviously it will definitely not work. If you've got small transactions, and let's say over the year you've done maybe less than 100 or less than 500, let's say, transactions, yeah, Coinly, and there's another one called Recap as well. Very good. They're very good for small, not a lot of transactions. But anything after that, if you're just, pushing money here, pushing money there, they are not that good. But if you're a small person, like I say, if you're dealing with capital gains, you're a teacher or something, it's brilliant, because you I don't know, you put £20 in Binance, you've done this, and Coinly, all you have to do is you have to go into Coinly and tell Coinly you put in £20 cash for it then to balance it out properly, or Recap. But it's the software, they're good, but they're not quite. I reckon Recap's actually better than Coinly, personally speaking, because Recap actually does tell you where the problems are and where you should, tell you we can reconcile it, but the problem we find is in XYZ. But Coinly is good, but they're trying to be everything to everybody, because they cover literally about 100 countries. You can think of that tax legislation in each country, whereas I think Recap cover only 4 or 5, so they're more, I think, US, UK.
So what's that? Recap, did you say?
Yeah, they're called Recap. Let me just
I would personally suggest to get like an accountant in this country. Like I put the company, and I didn't have to worry about anything. But true, I had like 55,000. So 55,000, I didn't know anything. I didn't remember anything.
Yeah,
So yeah.
it's called recap.io. That's their website. Just checking that.
Yeah, I'll check that out in a moment. But yeah, it is one of those things that it's never as simple as it might appear. I think the ultimate thing, the old saying is, it's really actually simple with paying tax.
Yeah,
It's
but
how much money did you make? Send it to the tax authorities.
I think Stefan's advice is good in that you need to get an accountant, especially one who's dealt with crypto, and it'll just make your life much easier. You know,
And I would suggest you to take only one from this country, because I had an experience where I basically took a woman from Fiverr, and she declared my taxes really bad. So I ended up having to pay all my money to the government, plus more money than I even had. So yeah, now I want to follow her and take her to court, but I will see if I'll be lucky.
The thought of using Fiverr to secure accountancy services horrifies me. It's
I
a
mean,
bit like it's a bit like that old joke that if you think good quality professional legal advice is expensive, try and use a cheap lawyer.
yeah.
Definitely. So it's kind of interesting. So, well, look,
Delayed
we've only got a couple of minutes left. I realised we just had one or two people just joined us as well. So apologies. We try and keep these on the hour.
Have you? Sorry.
Go
Have you
ahead.
checked the project called man, I forgot his name. It's a new one. It's Radix. Has anyone checked it?
Radix.
Radix is
Yeah. Radix have been going for years. So
What do you think about the way it works?
it's brilliant. So you've got Piers is the CEO and Dan is the CTO. Dan is a legend. He's an absolute perfectionist, and he's been working on Radix for years and years and years. And it is a DAG-based platform protocol, and they look like they've really taken off at the moment. I think they've just created a liquidity pool or something, because I'm on the Telegram group and I'm struggling to keep up with it because there's hundreds of messages a day. But yeah, Radix, in fact, they rebranded as RDX. Was it RDX Labs or something? And they've got the
now
RDX
it's called
token.
RDX.
Yeah. Definitely for the technology, definitely worth reading up on and learning more. That they're doing loads of stuff, and
They're doing a lot of
a good team.
execution sharding.
Yeah.
But they've been around for they're a very good project. I have a lot of respect for that project.
Yeah, I used to know a couple of people from that team, and they're very, very switched on. They're definitely worth looking at. So, folks, I'm afraid we're out of time, so going to have to close this off now. So, apologies for that. Edward, good that you got the audio sorted out eventually. Definitely be really interesting to listen to more of what you were talking about next time. If you want to rejoin us next week,
I'm delighted to. Yes,
that'll be really good. And for everyone else, so Donacha realised we kind of went around the houses with a few things, but some really interesting stuff. And Ken, thanks for sharing some stuff, and Stefan as well. So wish everyone a great day. Speak to you all again. Bye for now.
Bye bye. Take care.
Bye.